Welcome to the Zacks Roundtable Review, a discussion of current events affecting investors as well as other topics of financial interest, featuring the analysts and editors of Zacks.com. Well, with May being a little bit of a manic month in the market, the question now, as we begin a new trading month, is what is June going to bring? We're going to see if we can't get a read from our research director, Shiraz Mian, and stock strategists, Brian Boland and Todd Bunton, on this edition of the Roundtable. So typically when we start off the month of June, everybody's mind goes to summer, because summer, even though you can't tell it here in Chicago today, is not long off. And when you think of summer and the market, you think of the summer doldrums. So, Brian, I guess the question is, with us being in between earnings seasons, what is the market going to be focusing on here? Are we going to be seeing summer doldrums? Is there some calm that's going to be brought to the market?
Well, I definitely think you're going to see lower volumes. I think that's the trait of summer. You're always going to see that, especially on Friday, but throughout the next couple of months, definitely lower volumes. The thing that I've been keying on is, the second quarter here is just about done. We got 1 month to go.
Right.
Conference calls that I listened to have been saying that April was very strong, so was May. So, I'm looking for continued strength in the market, and I think that as we go forward, there isn't too much to worry about right here.
Well, as far as the market goes, you say that it's just a series of higher highs. You can't stop the freight train, so the market's trying to top itself constantly.
Right. There's always the idea of stick with what's working best right now, and you're going to see that in those stocks that are hitting new 52-week highs. If you've stayed with them, and over the last 6 months, the strategy has worked very well, that those stocks that are at 52-week highs continue to reach new highs. As we continue to see that, I think you stick with those stocks, you'll be fine. You don't want to go in and say, hey, where's the value right now? Where are the stocks at 52-week lows? Mm-hmm. Let me go find something that's cheap. That's not going to work for you right now.
Sure, as outside of this week, the economic docket is kind of light for the month of June. So is all of the economic news coming out this week going to be a major focus here for the whole month?
That's right. What you need to know, what the market is really fixated on right now, is all this taper buzz about the Fed and what the Fed will do with its QE program. And every economic report that comes out gets interpreted from the Fed angle as to how that increases or lowers the odds of the announcement coming in June or in September or early next year. So yes, it's going to be light economic data, but we have the FOMC meeting later this month, and then as Brian pointed out, this is the last month of the quarter, mm-hmm. and early next month we have the Q2 earnings season. And what we have seen repeatedly over the last many quarters is that as companies guide, their primary guidance is for the coming quarter. And we will hear how they see the second half. As you know, expectations for the second half for the economy as well as for earnings have held up quite well, even as expectations for Q2 have come up. So I'm a lot less optimistic relative to how positive stuff that Brian sees. I think what worked in the last 6 months may not be relevant to what will work in the following 6 months.
Okay, Todd, the economy here in the United States is in the spotlight this week. We have a series of economic reports that are coming out. Let's take a couple of them and see how they play in your mind anyway. What do you think of the disappointing manufacturing data that's out this Monday morning? Is that going to trump the May jobs report later this week?
I don't think so. The jobs report is always the main focus, basically for the month. So Friday's non-farm payroll report will be a huge market driver. But we got up to a terrible start to the economic reports this week. Here on Monday the 3rd, we saw ISM Manufacturing dip below 50, which signals contraction in the market. It was actually at 49. Right. It's worse since June of 2009. But do you think the market cares about that? No, it's actually a good thing, because that means, the Fed's going to stay on the gas pedal. They're going to continue with QE3 and let the party continue. But again, that could all change, with the non-farm payroll report on Friday.
Right.
And honestly, if that's really good, that could be a negative for the market for the reasons I talked about with the Fed and QE.
Japan's stock market well off its highs here for the year. Is that a concern to anyone here as far as spillover into our market?
It is. It is a concern because the Japanese QE and their easing was additional stimulus for the U.S. market. So all those Japanese investors that were looking for yield, surprisingly, our Treasury yields, even when they were at 1.6%, looked quite juicy to the Japanese investors. So if their yields are going up on the home market, you wouldn't have that money available for our assets.
Brian, you say that Japan Asia is a driver of the market here over the near term, but yet you don't think that Japan's market being off its highs is a concern.
No, not at all. I'm total disagreement with Shiraz here on this point. I think that the Japanese government said that they are going all in basically on the equity side. So it's not so much a thing about rates and where investors are looking for yield. They're looking at what they're doing inside of the equity markets there. So it's a absolute pummeling of money into those markets. And then there was recently the CEO of Blackstone was over in Japan, and he was just talking about the absolute shift in the culture, about how the culture has been depressed over there for almost 2 decades. But in the last 6 months, he says, you could feel the change from the people.
Back, right?
Yeah, basically that they've had a thing now, and they have a real plan to get some real action going here. And I think that's going to be a big factor inside of the entire Asian market. And when you have Asia really driving the ship, you're going to have valuations, especially in tech-related fields, moving up. And I think it's going to push all PE multiples, if you will, or all multiples higher.
But I did see this morning, Japan is technically in a bear market now. They have dropped 20% from their high. So maybe those animal spirits are turning the other way.
Well, these spirits can turn on a dime.
Yeah.
So in less than 2 weeks, you have a market that was running on all cylinders is now heading in the other direction, and that's what we are seeing now.
Yeah.
All right, in spite of all these other issues, let's bottom line it for the audience for the sake of time. As we talk here this moment, is the market story still bullish? The underlying story still bullish?
No, it's not. If you have the Fed changing its course, that changes the complete story around the equity markets and the bond markets, and it's a question of timing now. Is it coming in the June? Is it coming in the fall? Or it's coming early next year? Once you have the Fed take its foot off the pedal, you have a completely different narrative for the U.S. market, and that narrative is not very pretty.
Interesting, Brian. You don't agree?
That was ifs and buts and cherries and nuts. 'Cause it's if the Fed does that and if we get the numbers.
That's
and right
right.
now, I don't think we're going to get the numbers that are going to make the Fed take its foot off the pedal.
Okay, Todd.
For me, it's a tale of two markets. The underlying economic fundamentals do not point to higher stock prices for me. But as Brian pointed out earlier, the trend is still your friend. Momentum is in the market, and I think there's enough people getting into the market now that could push this higher. Fundamentals be damned.
Okay, we'll leave it there for time. And coming up in our next segment, the tale of the top picks for this week. Click on over.